Hi, Peter. Welcome back.
Have you unmuted him?
I asked him to unmute. Hi, Peter.
Good morning, Dale. How are you?
All right, there you are. Nice to see you. I know when you get a hold of me on Twitter and say you want you want to come on, it's because there's something that you want to document.
Well, you had me scheduled for October, but I thought that with the bottom of this correction days away, I thought it'd be timelier if I were to come and share what I got with you guys.
Okay.
Usually I come. In my previous sessions, I've always brought with me a dozen charts or two. Today I just have like 6 of them. I'm going to discuss the NASDAQ, the S&P, and Apple, since everybody's
Okay.
fixated.
So we're not quite there yet. You go ahead.
No, we're not quite there yet. Let me tell you, I'm going to start this time with the NASDAQ. I usually start with the S&P because the NASDAQ is giving me much more clarity on the lower time frames. And so I'm going to start here with the monthly chart going back to 1985 when the NASDAQ was incepted. And, the low I could find on my chart was like 106 or so. And for all practical purposes, that's good enough.
Okay. And
so the first 15 years of the NASDAQ, we saw it rise to 5,000. And then we had the dot-com bubble burst, and that shaved off, I don't know, 80% of it or so.
Right.
And then we had a, based on my analysis here, I have super cycle waves 1 and 2 being the first rise to 5,000, the manic rise, and then the cataclysmic decline into 2002. And then we started rallying for the next, I don't know, 5 years or so. But the financial crisis, even though the S&P came back down and tested the 2000 lows, even the S&P took it out by a small margin, the NASDAQ did not. In fact, it just retraced 78.6% of yellow wave 1. So the yellow is my cycle degree of trend. And then from the bottom of the financial crisis in late 2008, cycle wave 3 got underway, and everybody was tiptoeing around that initial rally. But in retrospect, look at it, it was the third of the third. Yellow wave 3 of orange wave 3. And then, of course, we had the decline earlier this year, the fastest bear market ever.
Yep.
That was cycle wave 4, and now we're having the euphoric move at the cycle degree of trend, which hit the underside of my ultimate upside objective for yellow wave 5 and hence orange wave 3. And that, of course, along other things, precipitated the decline that we started last week. I'm not saying that it is over. Actually, it's not. There's another push higher. So super cycle and cycle. And then I have 4 more degrees of trend. I'm going to go into the details of yellow wave 5 here. Right here, 4 degrees of trend: primary, intermediate, minor, and minute. In fact, if you look back for a minute, control. Sorry about that.
It's okay.
You notice that the super cycle wave, multi-decade, 40 to 70 years, Well, so far it's been ongoing for 35 years, and it still has more to go, right? Because Orange Wave 5, Orange Wave 4, and Orange Wave 5 aren't in place yet. And then you got the cycle degree of trend, 1 year to several years, or even several decades under an Elliott extension. Well, so far, it's almost 2 decades. It's extending. So far, so good as far as the cycles and the estimated time window. So now let's look at primary, intermediate, minor, and minute. Primary is a few months to a couple of years. So far, the green trend, the primary trend, we're currently in wave 4, green wave 4. I'm expecting it to drop to about 10,400, meaning retest the lows of orange wave 4, possibly even go a little lower. There's plenty of room for it to do so because green wave 2 was below 50%. So I mean, you could have that's the range, 10,300, 10,500.
Okay.
So from a time perspective, everything is progressing nicely. The primary is so far, how many months are we into it? 6 months. And we have a few more to go. I think next year, green wave 5 would be in place. And of course, my target is somewhere in the 13,600 to 14,000.
And you think that'll be next year, Peter?
Yeah, because what's happening is you're in the euphoric stage of the cycle wave. That's look at the slope. It's almost 90%. It's practically 90% on my chart.
Parabolic.
So we are 3/4 of the way to my target, and we've done this in 6 months. So give it another 6 months, because maybe towards the end it's going to slow down a bit, and you have elections, what have you. So I think next year, once there is a vaccine, everything is priced in at that point, and the market, from a valuation perspective, is crazy right now. If you look at the S&P earnings estimates, we're trading currently at 30 times, and not only that, we're pricing in not just the end of 2021, but beyond that. So we're pricing in estimates 2 years out, assuming nothing's going to happen. So just like they did earlier this year, the estimates were going out of, they're just out of outlandish estimates. And everybody was calling for 3,700 and 3,800 and this and that. And then from 3,400, we dropped 35%. So they extrapolate, and they keep extrapolating until they're wrong. And they were wrong earlier this year. They're going to be wrong again in a few months. So moving forward, this is what's given me a lot of clarity. Again, I'm looking for the NASDAQ to bottom around 10,400, meaning the bottom of the orange wave 4, which in a way would be a back test of the horizontal red line, the top one. That's the value area high for 2020. So it's a back test of the breakout.
Interesting.
Now, to the S&P, the same thing, went back to the 1930s. The bottom, the lowest price I could find, was $4.43 back in the 1932, I think, or something. And that was also good enough for all practical purposes. We had a sideways wave 2 that consumed 9 years, 7, 8 or 9 years. And then we had the shortest wave 4 ever, and the reason being is that the momentum that carried us all the way to the top of wave 3, those who weren't riding that rally found it to be a great opportunity to get back in. And also you have unprecedented stimulus measures that the ones implemented 15, 20 years ago pale in comparison to. In other words, what did they do back then? They lowered interest rates. Here, they're buying every bond conceivable, since when does the Fed buy ETFs?
Yeah.
And it's crazy what they've put behind all this, and send people checks and so on and so forth. So it was the fastest rebound ever. No one could believe it. We hit a little snag, but I am expecting the S&P to bottom very soon, probably next week, because you have a Fed meeting, you have the Apple event and all that. I think it will bottom somewhere between 32.30 and 32.70. Let's call it 32.50 for all intents and purposes. And from there on, I think we're going to go north of 4,000, as high as 42 or 4,300. Now, the interesting thing is that the bear market really wasn't just a month long, okay? Because the S&P 500 isn't all the stock market. You have the transports and the Russell 2000. Those really topped in the third quarter of 2018. Their bear market has been ongoing since then, and it took a year and a half to complete. So when I see people say that's the shortest bear market ever, well, you're just looking at the S&P. You're only looking at the NASDAQ. But other facets, other areas of the market has been in a bear market for much longer than a month.
And isn't there like a different S&P measurement, Peter? I don't know. Is it the non-cap weighted? And
yeah, you can do the equal weighted.
Equal weighted, yeah.
Equal weighted. You can do the one excluding the mega caps and tech and all those crazy things, because all these, the mega caps and all these cult stocks, they distort the overall picture. Everybody gauges the market using the S&P 500, where you have Apple with, I don't know, what's the weighting of Apple in the S&P, 6% or something?
I'm not sure.
I know in the NASDAQ it's like 11 or 13%, something like that. I don't recall. Anyways, I am expecting it to bottom in the 3,200 somewhere. 3,250 is a rough estimate. Now, this, of course, is the monthly chart going back to 1932. This is the weekly chart. And as a trend follower, I use 2 moving averages personally to gauge the intermediate trend and the short-term trend. The green line, of course, is the 50, a period moving average, which is the 50-week here. The white line is the 15-period exponential moving average, which provides a lot of support along the way. So I'm expecting a back test of that line. It's currently at 326. There's a gap there too. So again, 325 on the SPY, 323 to 327 in that area next week. Okay. And from there on, this is the weekly, by the way. This is the weekly. Notice that on the short time frame, meaning starting in March, my target for yellow wave 5 is 4,100 to 4,300, roughly. Now go back to the monthly chart, and you'll notice that my super cycle target is 4,286, which is right in the middle of this particular range.
Wow, that's really
Okay.
confluence, huh?
Yeah, you got to look for confluence, no doubt.
Yeah.
Here's the SPY on the daily chart. This move right here, again, you have the histogram, the volume profile. The top red line is the value area high. We broke way above it. And we reverted to it. And we're going to revert to the VPOC, volume point of control, which is, around 323 or so. So everybody's looking to buy at the 50-day moving average. I think we're going to slice through it briefly to take out all the stops or run the stops, and then we're going to bounce back. So currently we're in a, from a DeMark standpoint, today will be TD buy setup bar number 6 at the open. 6 is today, 7, 8, 9. If we get to 9 and it doesn't get negated by a bullish price flip, 7, 8, 9 would be Wednesday, which is when the Fed meeting ends. And Tuesday, of course, is the Apple event, the iPhone. So all these things, they happen around events. And of course, you have the a new earnings season to start a couple of weeks after that. So this is a nice flush out ahead of the next earnings season. So now let me talk about Apple. It's the last chart I have. Here's Apple. It was an incredible run because I never expected yellow wave 5 to exceed 460 to 480. It went, I don't know, 80 points over that, 60 to 80 points over that. Yeah. So we broke out of this rising wedge.
What an overthrow. And so you're looking
overthrew big time. And I saw it. That I looked into the details and I saw that happening, but I've never seen a fifth wave explode like that. And the reason it exploded is because it's part of the purple or pink third wave, purple, I would say.
Yeah. Okay.
So because it's part of the, and so now because wave 2 was about the purple wave 2 was about 50%, 40, I think it was 45 or 40. When we hit the edge of the gap at 107.89, it's exactly a 38.2% retracement of the purple third wave. Okay, and so that's exactly so. In essence, this is a reversion to the mean. We're coming back down, and I don't know if that gap will get filled. My guess is that it won't get filled. But we'll come, maybe it will, maybe it won't, we'll see. So 108, maybe 107, 50-day moving average, and a back test of what? The top of the wedge.
Yeah.
From there, I'm expecting Apple to go to 160. Okay, that would be the equivalent of $640 pre-split.
Okay. Okay.
And after that, it's going to get decimated with the rest of the market. So
could this top before the rest of the market?
Yeah, I've always found Apple to be the canary in the coal mine.
Yeah, so it could top before we're at 4,200 in the S&Ps and already be.
Yeah, absolutely.
Yeah.
Okay. Absolutely.
Interesting. So it led on the way up, it'll lead on the way down.
Yeah, and the interesting thing about the February top is that it spent the entire month of February, forming a head and shoulders stop and a double top at once. So it had a double top and a head and shoulders in the second peak of that double top. So it telegraphed all sorts of messages. And so I would really keep an eye on Apple as you know, well, you know what's going to happen towards the end too. The same behavior that we saw right here.
Right.
Okay.
Parabolic.
Yeah. Yeah. And what did we see here in late August, early September? We saw the S&P rising alongside volatility.
Right. Yeah.
And that's another telltale to keep an eye on. But what have you seen recently? S&P near the lows, yet volatility is subsiding. I'm not going to say getting crushed. It's still elevated, but you're starting to see the divergences, and those are bullish divergences. So
yeah, that'll be a pretty good tell if we trade S&P, it's 3250, 3200, and the VIX does not make a new high.
right.
I think it could. It looks like there could be one more stab up there for a third drive, but
Well,
that's something
2
to pay
days ago
attention to.
when we rallied 2 days ago, it was a convincing rally, and of course, it was all wiped out yesterday.
Right.
But what I saw is the VIX future, not just the VIX
Did
spot.
nothing.
VIX futures dropped big time.
Yeah.
And so that tells you that they're expecting this rally, this decline to end very soon. Just like the VIX futures were rising with the S&P, and that was telling you that the rally is ending very soon. And so that was a sucker move the last 2-3 days, or last week when Apple and Tesla split. That was a sucker rally, basically. And that's about it. HYG, high yield bonds. I'd keep an eye on that, because another telltale is when it gets to 87, 88. That's where I expect it to top. 87, 88, in that range. Over 87.
You have a chart of it?
I don't have a chart of HYG,
okay.
Unfortunately, but I wanted to mention it. Is that that's when you're going to start seeing the divergences working their way slowly over weeks and months.
Okay, where we'll start to have rising yields, but it doesn't bother the market.
Right.
And there'll be disintermediation for a year or so.
Yeah.
Like we had in 87, where yields were going up and the market was going up until it reached a tipping point.
Exactly. 100%.
See, I'm a mind reader. Plus, I could interpret what you're trying to say.
No, it's because you're a lot more experienced in that area than I am.
All right. Well, I tell you what a great presentation is. Is that it?
That's all, short and concise. I don't want to go.
Yeah, it's good.
Because timeliness is important for me.
Yeah.
So, anyways.
Well, I'll just say, Peter, you've called a lot of inflection points here in our community, and that's why when you say, I want to get on, I find a way to do it, because I know something's happening soon. And appreciate you reaching out to us to, edify our community with what you see coming right around the corner.
Much appreciated. I always enjoy coming on, and we'll see you again in a couple of months.
Okay, buddy. So there you go, everyone. That's Peter Ghostine's take on what's happening in equities. My trading warrior brother, Peter Ghostine, thank you, man. I hope that, you and everyone your work reaches are able to navigate this. I hope that you and your loved ones remain untouched by this virus. Do you have any view, like you think there is going to be a vaccine, Peter? You believe there's going to be one?
No doubt about that. In fact, there are a couple of dozen vaccines. They're just slowing they said there won't be a vaccine until a year and a half.
Yeah.
So no matter what they say, it's all, we're going to have one in November, this and that. They said from the get-go, it's going to be in 2021. Yeah. And that's why I feel that once we're pricing in all that stuff, right? Once the vaccine is out, we're back to reality. There's nothing more to look forward to. It's going to be the top of the market.
You know who else said something like that to me? Peter Bookvar.
Right. Because the market is a discounting mechanism. It prices everything in, and eventually when it sells the news.
Is it pricing in What's the market pricing in on the election coming up here in less than 2 months?
You know what? I called the Trump the Trump win in 2016 based on what I was seeing in the market. Right now, I don't think the market cares who's president.
About that.
Okay,
Yeah. As long as
because
we have a transition of power
yeah, and the
or a
Fed.
peaceful resolution to it.
Yeah, I mean the presidents don't make markets. They can't. I mean, they shouldn't be taking credit for what happens in the market. But let's say that Biden wins, okay? And first few months are transitional, everything is going on slowly. And then, you know, what happens after that? Think about it. So I think whoever is president in 2021 is going to preside over one of the most miserable times from stock market perspective.
So you think
And
that we complete all your super cycles in about a year? I know some
yeah,
people talking
you know, here's the interesting
2022.
thing. I failed to mention something. Let me go back quickly and mention it because it's important. Let me go back to here. This is super cycle wave 5 in the NASDAQ would carry us to say 15 or 16,000. Okay, so the coming correction, the big drop, will be super cycle wave 4 followed by super cycle wave 5. But if you look at the S&P, super cycle wave 5 will be in place when super cycle wave 3 in the NASDAQ will be in place. What does that mean? That means when we drop down, it'll be super cycle wave 2 on the S&P, right? And then what will happen? When the NASDAQ gets to start its super cycle wave 5, the S&P will be starting a new cycle wave 1 of super cycle wave 3. So the S&P is going to retest the highs and drops again. It's going to go up and back down, similar to the sideways movement in the S&P that we saw in the first decade of this century. In other words, yellow wave 1 will begin once orange wave 1 begins. The top of yellow wave 5 is orange wave 1. We'll drop back down here and start yellow wave 1 of orange wave 3, and yellow wave 1 will retest the highs and then retraces much of it afterwards, while the NASDAQ is doing what? Completing its super cycle wave 5. So what I'm expecting is a very sideways decade. It's going to be a horrible decade, in my opinion. A lot of sideways movement for much of the decade.
Okay.
So it could be the lost decade again.
Okay. All right. Well, you know, having your roadmap won't be a lost decade for us. So thank you very much, Peter.
All righty. Thank you very much.
Have a great weekend. Everyone else, have a great weekend. Peter Ghostine Hamashu is his name, and you can find him on Twitter at Peter Ghostine. So that's a wrap, everyone. Have a great weekend. Remember, don't just count your shares, count your blessings, and we'll see everyone on Monday.
Thank you, Dale.
You're very welcome. Thank you, Peter.